Get rid of that. All right. What's up, everyone? This is Dre Trades in the building, and you can see I just started to talk because I got all kind of raspiness up in my throat. Oh my gosh, how embarrassing! Hold on 1 minute. Goodness gracious! All right, so what's up, everyone? This is gonna be a different video, and it's gonna be quick because I'm gonna talk about an Iron Condor trade that I got on that I decided to put on. Don't usually trade Iron Condors, but I was looking at the IWM. I've been trading the IWM on the call side, selling it short, and I thought it might go sideways, so I decided to turn it into an Iron Condor, and I figured I'd just share the trade. But before I do, and I'm gonna do it live because I just don't want to do any uploading. I don't want to do any rendering. And if you guys have any questions, I'm gonna go ahead and we can talk about it. I'll be on as long as you want, but if you don't have any questions, I'm out of here. But before you come in, we'll just go ahead and talk about the market real quick. I got the YouTube live, right? YouTube live. I don't know what I'm saying. I got the chat going on. Like I said, it's a little scary doing it live because you'd be like, blip, 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 blip. But I could do this, man. I could do it. I got this. I got this. Let's go ahead and zoom in with the charts. And y'all already know, if you follow me, I can't see anything. Anyway, so the Dow. Here it is. Do y'all want to see my face? Y'all want to see? Does that work? No. How about that? All right. We'll go with it. We'll go with it today. All right. Hey, babes. What's up? What's up, sweetheart? Sweetheart's in the building. That's the jewelry box. All right. So here's the market. When it first opened up, and I was like, I actually thought it was going to be down today. It was just kind of flattish. Stocks kind of came out the gate and was just going sideways for the most day. And then I started getting busy. Me and the jewelry box had some things to do. And I wasn't really paying attention to the market. So at the end of the day, I'm just looking at these charts. So I'm really just as surprised as you. I'm really just now seeing this and just looking at the rip at the end of the day. And sometimes that tells me where we're kind of headed in the long run. I mean, there's a lot of bullish action, especially going into the weekend. They're going to go in a 3-day weekend and buy up stocks like that. You mean that, to me, that's bullish, right? But the IWM didn't really have that kind of participation. I'm just going to bring that up real quick. And I'm glad it didn't. See, it's barely up. It's up 3 pennies, right? So I'm glad it didn't because I have the Iron Condor, and in the bull market, the reason why I don't trade Iron Condor is because I feel the call side be getting blown up, and I just like selling the puts. But I've been in this trade. Well, let's put it this way. I traded it last week. I sold the calls, totally profitable. I want to redeploy the money. And this time I'm like, it's right in the middle. So I decided, you know what, I'm gonna do an Iron Condor this time. And then I figure I share it. So let's get back to the heat map. Let's see the heat map, see what's going on, and everything, right? Everything. This is a beautiful day, man. Look at it. It really was positive across the board, except for the small caps. I look at Tesla. Tesla down percent. If you watched my video last week, the last video I did, we talked about Tesla. I talked about the chart, and we could bring that up real quick. Let me see. There's the Iron Condor trade. Let's go to the charts real quick. I just want to talk about Tesla because it's a hot stock. This is what people be wanting to trade. This is what people like, right? I'm gonna zoom in here, and there's my little channel. And I just thought that Tesla had a little bit more work to do. I did like the bounce that we had. Let me see, was I working with that? Let me look at this. I'm trying to look at what I had going here. I did like the bounce we had. I did like this higher low right there. And then I was just like, I need, because the rest of the stocks were ripping, by the way. Yeah, the rest of the stocks had a real good week. And I was like, I don't know, man. I need a little bit more data for Tesla. It's a little too soon. I want to see a break out of this range right here. And you can see it struggle. It's struggling right there, right at the top of there. And I think once we can do that, maybe we can go ahead and say, yeah, it's safe to, hey, sell puts underneath. Or, because I think it if we can get out of this area, I think we'll probably wind up eventually challenging the highs. I mean, tech stocks are pretty bullish. So I've been selling puts all the way on them. I wish I was more aggressive. I really wish I was more aggressive. What's up, Cashmatic? How you doing, man? And I'm not. I just been kind of being safe, selling these spreads, but it's all good. It's all good. Because I don't know. I like it. As long as you're making money, it's all good. And I do got a lot of other aggressive trades on as well. So, but I just wish I was being more aggressive with these since the market just seems to just be going straight up. All right, so let's go ahead and talk about the IWM. And I don't. So if you have any questions, hopefully I don't even know who's up in here. Probably nobody. Let me see something. Can I read that? All right. I know I got Babes, Cashmatic, and somebody else. Somebody else is up in here. The IWM. Here he is, right? So let's pull up the Qs real quick. I'm just gonna compare it to the Qs, and you can see that rip. Oh man, they just ripping. Look at the moving averages right there, right? Just look how they separating and starting to go higher. Pull up the SPY, and you can see that rip. That's just been on fire, right? You can see the slow and fast moving average separating and heading to the upside. Wait a minute, hold on, that's not the SPY. That is same chart. Anyway, so let's go to the IWM, and you can see a big difference. This is weak, man. The relative strength is weak here. All right, this thing is only up 3 cents because the market was ripping today. It's kind of holding it up, but as soon as the market decides to be weak, this thing is going to be extra weak. So I to tell you the truth, I really should have just stuck with the calls, but you see how it's along that trend line right there, and it could bounce here. Somebody zoom in right here. Uh-oh, I'm not getting a good chart. You see right there, it's on that trend line. So I'm like, you know what? It could bounce and start to go higher. So to be safe, maybe I could sell some puts too. But it's right there in the middle. And look at how the moving average is flattening out, right? So it's kind of telling me that maybe I can get away with a Iron Condor. That's where I'm selling options on both sides of the market. I'm selling some calls via call spread, and I'm selling a put spread, right? And I'm collecting credit for the call side, and I'm collecting credit for the put side. And I'll show you what that looks like in the analyze tab in just a minute. So you can see that's the daily. Look at the weekly right here. Right, look how it's just the small castle's on fire, right, and just see how it's starting to flatten out, right, a little sideways action. So I'm actually gonna play that, and this is only a 7-day trade. I'm trying to be out of this thing by Monday or Tuesday, man. Tuesday, I'm trying to steal $300 off of this trade. So let's go ahead and talk about it. And here's the trade right here. I did it 10 times. Okay, so I sold the. Oh yeah, let's look at the charts. By the way, here's the. Go back to the hourly. These lines is basically where I need this stock to stay into, and I'll go ahead and highlight that with a rectangle. All right, and I'm gonna get rid of this line right here. Wait a minute. Drawing. All right, so I need the stock to stay in here just a few days next week, okay? And I think I can get away with this trade. So you can see it's still right down the middle, going sideways. So I'm gonna head and put an Iron Condor trade on, right? So here it is. Here's the trade, right? So I did it 10 times, but if you were to do this trade, you could do it one time, man. You could do it one time. I sold. You can see the. Let's go back to the chart. I totally forgot. I sold the 230. I'm in trouble if this thing goes above 230. Right now it's trading at 222.59, and I'm also in trouble if this thing goes below 212. All right, that's my edges on the thing. So now let's go back to the analyze tab again for the third time, and I did $5 wide spread. So I sold the 235 on the upside, the 230 on the upside, and for protection, I bought the 235. Right, I don't need this thing to go up 500 points overnight, and then I'm in some serious trouble. They come in to break my legs. I don't need that. Then on the downside, I sold the 212, right, and then for protection, the 207. I bought the 207s. That's 5 points away, 5 wide. So here's the Analyze tab, and let me see if I could Gotta shrink this a little bit. Give you a little bit more of what you're seeing here. I'm going to talk basics. Some of you guys know what this is, but I'm going to go ahead and keep it basic. That's one thing I need to practice, right? I need to practice keeping it basic. So this kind of helps you see what's going on with the trade. And down here is the actuals, the stock price, right? 200, 210, 220, 230, 240. And over here is how much money I'm up or down, right? Here's the zero line right here. Right, so if it was up here, I'm up 1,000, down 1,000, down 2,000, down 3,000. All right, so and right now, this center line, this dashed line going up and down is the price right now, 222.54, and that's this slice right here. See, I got three things going on here. 1, 2, 3. That middle slice, this middle part is the price right now. That's this line. This middle part represents this line in the center, 222.54. Okay, and so what's gonna happen? You can see the most I can make. I did it 10 times. I sold it for 68 cents. Right, I did it 10 times. 10 times. So $680. I took a credit and went right to the account. Boom, 680. Now I need to buy this thing back or let it expire. Those are the two options, and I want to try to buy it back cheaper than 68 cents. So I just want to extract $300 off of this trade, and I'll tell you why in a minute. But so here we go. $680 is the most I could make, right? That's the most I can make as long as it can stay in here and here between 212 and 230. I'm gonna collect that whole $680 and just be able to keep it and walk away and buy something nice. It cost me money to do that. I mean, margin, risk. Okay, the risk for this trade was $4,320. You would not be able to put on this trade unless you had $4,320 available. Now, I did it 10 times. Okay, so if you were to do it one time, and I'm going to simulate it, let's bring it down to one time. It would only cost you $400. I could have did that math in my head. Come on, man. Come on, Trey. It would only cost you $432, right? You need $432 to collect $68. Okay, so I did it 10 times. Let's bump it back up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, and now it's $680 I collected, but 10 times my risk, $4,320. You should like this trade, Mr. Generate. I've been seeing you be getting pretty technical on the Twitter. I've been seeing what's going on. I'm like, all right, JRH, do your thing, man. What did you say? You said cash, and you're saying what's up to everybody else. So, like I said, if you just jump into here, Mr. JRH, I don't usually do this, man. I don't usually do the Iron Condors, but I just noticed the idea of IWM is going sideways. I actually think it's going to go down. So I decided I'm just going to go ahead and do both, right? I'm just going to go ahead and do both, and I'm going to try to get out of here before Tuesday with $300. And the reason why I picked $300 because I've been doing this for a while. I've been doing this. I've been doing the SPY. I've been doing the Qs, and I've been doing 10, selling 10 for 30 cents, getting $300 and letting them expire. And it's been working like a charm, right? It's been working like a charm. So I'm doing an Iron Condor. You know what? I just still want to collect that $300. I was able to sell the other side, if you understand this, with the same margin for the most part, right? Because they know one side is going to be a winner. It's guaranteed a winner. So you could sell the other side for the same amount of margin. So here we go. $300. I still want to collect $300 though. So to do that, and minus my commission. By the way, you do this 10 times. It's a lot of commission. That's the one thing I don't like about Iron Condors as well. I'm doing it 10 times, each leg, 4 legs, 40 contracts, 65 cents a contract. I think that's $32 for the trade one way, right? To get in, $32, to get out, $32. That's why I like to let them expire, but I don't want to be greedy and, worrying about commissions. So let me see, 65 cents times 40, all right, $26. All right, yeah, $26 in, $26 out, right? If you, with 65 cents. All right, so what do I want to talk about? Okay, so I immediately did a trade to put an order in to buy this thing back, and I did. I want to get $300 minus my commissions. I want this trade to pay for my commissions. So anyway, that wound up being 32 cents. So I'm gonna buy this thing back. Put it to buy, right? And don't look at the chart and kind of jump this down to 32 cents. I put in a good to cancel order, and I'm gonna try to get out of it. But I'm gonna go back to where it was. Let's click it back to 68 cents real quick. And I'm just gonna show you one more thing. Let's put it back to sell. All right. Right now, when I put this trade on, the delta was like $1. So it was delta neutral. Didn't matter which, at that point, it didn't matter which way the stock went for the most part. I wasn't going to lose money, but it started creeping to the upside. So right now the delta is negative 35. I'm meaning if basically I'm short. I'm short the IWM. So if this thing goes down a dollar, I'm going to make $35 for the most part on the trade. But look at the data. This is what the trade is all about. And this data is $105 a day. And remember, we collect this data over the weekend as well. All right, so it counts for today, tomorrow, Saturday, counts for Sunday. And if the market was closed for a holiday on Monday, it would count for Monday too. So $105, let's say I start to collect that on Saturday, right? Then the next day, because it changes as you get closer to expiration, that this data number will actually go up. Be $111 the next day. And if you click it again, boom, $114 the next day, right? So come Monday, this thing, as long as IWM is kind of sitting right where it's at, or preferably even slightly lower, I should be able to get out of trade and collect my $300 and be gone. If not, hopefully Tuesday. So what I don't need this thing is to kind of rip one direction or rip another, because even if it's in the range, the gamma is gonna kind of get me. And this is a whole new video where you talk about gammas. One of the reasons why you don't want to trade close to expiration, because it just starts going against you real quick, because they don't even know which way the stock is gonna go, right? So let's hopefully it stays right where it's at, less volatile. The theta will kind of burn off and I can get out, right? I can get out Monday or Tuesday. I just want to collect $300. And you can see that this trade is collecting $100 a day. All right, so that's it, man. That's the trade. I'm looking to get out. I'm looking to buy it back at 32 cents. And I'm looking, I mean, if this thing were to go against me, maybe $1.30, I'll get out. So that's like double this credit, 68, whatever that would be. Let me see, 68 times 2. Yeah, $1.36. So somewhere in there, I would reevaluate and say, let me get out, and just kind of take the loss, and hopefully that doesn't happen. I'm actually feeling pretty confident, but I gotta admit, man, I suck at Iron Condors. It's one of the reasons why I don't trade them. We trade what works for you, right? Whatever you think is working, stick with that. No need to experiment. I don't even know why. Like I told you why I put this on. I don't know why I put this on, but I kind of told you why. And I think I'm feeling pretty confident, man. I'm feeling pretty confident. Collect this 300, and then if I can get it out on Monday, I'll go ahead and redeploy maybe with a put spread to just possibly stick to one side. Maybe if it starts showing me direction on which way I want it to go. So Mr. Jerry says, you're scared to let your options expire in the Diz put credit spread. I'm looking for 50% gain. Yeah, I hear that. And I'd be the same way. What I'd be looking at like is the delta, man. If I could keep that delta like around this one right now, the delta is on the legs, the short legs is like 11 and 12. And then let's say Monday it's 10. And I'm still in the trade. Then Tuesday it's 9. I might consider pushing it, and then it goes to 8, and then so I'm like, man, I'll start measuring it. You do sweat it out, and you are getting greedy if you get over 50%. So I hear you, but I don't know, man. Sometimes I just be like, I just don't want to pay those commissions because I be doing it so much. I need to do it on the rut, and I could do it like one time or something like that. But there you go. But I hear you, man. It's best just to get out, really, especially when you're this close to expiration, because a big turn, a big down day. Let's say I don't know, something happens, whatever, over the weekend, and here comes Monday. the Russell's down 2.5%. Oh man, I'll be underwater. If it's something like that, even though it'll probably still be in the window, it's one of the sides are gonna be getting hit hard. And I may get cute with it and close out the side that's not being tested and maybe or push it up. It depends. I don't have a plan like that. I know I should have a plan on if I'm going to defend it, but right now I don't. I just plan on getting out if it reaches a certain price. But we're human. We're human, right? So we'll see that price come along, and now we're gonna figure out how to defend it, right? So I ain't gonna say I ain't gonna sit there and say I'm not gonna defend it. We should, but I'm human. I might try to defend it, depend on what's going on. But as of right now, yeah, I'm just gonna get out if it reaches a certain price level. So yeah, that's the trade, man. I've been trading these credit spreads on the SPY for the last 3 weeks or so. Getting in on a Monday or Tuesday. Actually, just putting on 7 days because I might get it on a Wednesday, the one that expires for the next Wednesday, right? And but the market's been going up, so it's really no genius. It's no genius here. The market's going up. I just been selling puts about. Look at this, right? So you can see how it's been working for the last 3 weeks, man. It's just going up, right? I think we go up or sideways until earnings start to come out, until we start to see mainly the big boys, right? So the Apple, Microsoft, Google, and all them guys. And then after that, maybe we start to pick a direction. Well, pick another direction. But yeah, it's just straight up. And this is why I'm like, damn, I should have just bought some calls, right? Just been done with it. Calls are getting cheap. The VIX is going down. So I should say options are getting cheaper. Mostly to put it's because when the market's going up and you're trying to buy calls, those calls are inflated. It's always best to buy calls when the market's down and vice versa, or buy your puts or whatever when the market's going up. The trade I also put on today, because I sold some Qs. I sold some Q spreads, and I put those on first thing in the morning. As soon as I saw that downturn, and I guess everyone was thinking about me, thinking like me. Here's the market, right? The market gap down, and it's going down, and I'm fighting to put on my spread, I sold some puts. I can't remember the strike number, and sure enough, it was a great trade. I almost could have got out today, right? It was a 7-day trade, and this one was 14 days, and it's just taken off. So that trade's looking good so far as well. I almost think you could do it all day, like I said, until earnings come out, right? Because really bullish market, man. This is incredible. And some people saying the pullback. We got the pullback. You saw the pullback. We just had 10. I did a video on it. What stocks are on life support, right? I think the Nasdaq was down 10, 11%, but a lot of stocks was down 30%, 40%, 20%. So we got the pullback. You can see the pullbacks on this line, right? And so we're ready for another run. I don't think it's gonna go straight up like that, but before we touch again. Last time we touched this trend line, you can see we bounced here, right? Zoom in a little bit better. Ah, man, that's an ugly zoom. Let's do something like that. There we go. And you can see, right, we're here, right? That's where that was the pullback, and that's when I said the stocks was on life support, and it wasn't necessarily what was happening with the Qs. It was inside the Qs what I was seeing with some of the stocks. But the last time we hit trend was October 26th, right? And then the time before that was September 21st. So that was a month. This was a while. Who knows how long this one's going to be, right? Before we come down and touch trend again. I think this trend line right here that I got drawn is probably pretty important. I think if we break this one, maybe, things won't, I'm going to say we're just going to go down, but we won't go up. Cashmatic, what's up? Let's see what you got to say. He said, do you see we running? Yeah, I do. And even if they have good earnings, the stocks go down. With earnings and I never play them, I don't know. I am not. I mean, to me, charts say nothing about where it's going to go after earnings, in my opinion. I know some people, generally it'll go the same direction it's going, right? I think that's general, but it might drop down 10%, whatever, 5% after earnings, 8, and then come right back up. Or wait a day. Sometimes you get the fool, right? Where it's flat. It does nothing. It just crushes all the options, right? Anybody that bought options, it just kills them. And then the next day it makes this move. So you just don't know. I will not be doing these kind of trades. Well, I may if it's the SPY or as long as it's an index, but I will not do them on single stocks. Yeah, I got Facebook up here. I'm sorry, I meant to bring up Facebook, and yeah, look at it running. If you watch me for a while, with last year or so, Facebook always runs into earnings. It's one of the best stocks that run into earnings, and I missed it. I always have this play on. I missed it, and here it goes. I did sell some puts against this last week. I think I sold twice, but it was pennies, man. It was pennies. I could have been making thousands. So very disappointed on this move, and it's new high. Facebook don't report until I think the last week of October. It's October. Hold on a minute. Let's pull it up here. April 28th, the last week of April. So it's a while. It's at new highs. I see it running all the way into this number. I don't know if it'll get too hot because I don't know how much it's gonna run, but it's at a new high. So therefore, that resistance it just broke through is now support. So you're probably even safe if you want to sell some spreads above that 205. See, it's just breaking out here. I don't think it comes back down and crashes before earnings. It may do that after earnings. Remember that Facebook had the biggest drop of any kind of S&P 500 stock. Oh, what is it? Last of 2 years when that thing dropped 22% or something like after earnings. It was like a record or something like that. That was a painful drop. I think it was at 220. 205 and it went down to 150 or something like that. It was crazy. It was some kind of record there. I think it was the biggest drop on the S&P 500 company after earnings or something like that. It was painful. I wasn't in it. Thank God. Anyway, all I do is credit and debit spreads. He tried the Iron Condors, but was always nervous when the stock moved too much. Yeah, because the thing is with Iron Condors, the stock really has to be going sideways, and you could have been trading it all day. Like, let's say this Facebook here. Can y'all see that? If I zoom it over here, right? You could have been doing Iron Condors this whole time, always since August. It's been doing nothing, right? So, especially if you was out, because here's a little move, here's a little move. So if you was like 40 days out or so, you would have been outside this range, and you would have been making money all day. So the key is, and look at this area right here, right? So you could have been doing it here as well. Just make sure the stock that you're doing it on is going sideways, and that's the key. You can't do it on a stock that's going up. You're going to get blown, or a stock that's going down. Right, you're gonna get blown out on one of the sides. I don't want to say blown out, but one of the sides are gonna be getting tested. So just hearing a bunch of noise out there. One of the sides are gonna be getting tested on you. So you don't want to look for sideways action if you do the Iron Condor. Now the IWM has just been showing it just started showing the sideways action, so I could be a little early here, but like I said, I'm just hoping Monday, Tuesday, it's doing much of nothing. And then hopefully I could be out with my little profit that I plan on getting. So back to that IWM real quick. I'm going to show you the percentages because you see I got $4,320 risk. And it doesn't matter how many spreads you put on. You could do one of these or 10, 50, 20. If you was able to sell it for 68 cents like I did, that's a 16% profit. Right, 16% on your risk, your money for the most part. I want to try to get 300s, very specific. The most out, that's a 6% profit. All right, so that's not bad, especially for a few days. Right, that's good. I know a lot of people think that's small, because if you bought some call, you've been killing it. But just imagine keep doing that. And that's where the magic is. You got to annualize these numbers. This is just 6% for a couple of days, right? So imagine I kept doing it, kept being successful, then you annualize that. Oh man, it'd be ugly. And that's what I try to do. Believe it or not, and it's hard for me to do. Like I'll start getting bored with the trade. I'm like, oh, okay, another 3. It just doesn't seem like you're making the money. But if you can really get these kind of trades, like what you're doing, Mr. Jarvis, and just be consistent with it, you'll just blink. Next thing you know, once they blink, you'll be like, holy shit, look at all the money I'm making. You know what I mean? It'll just come to, right? Because it's slowly adding up in that portfolio. And next thing you know, like, holy shit, I'm killing it, right? Especially if the market starts doing nothing and everybody's not, don't have good numbers. And you hear professionals saying, yeah, I'm up 8% for the year. And you're like, damn, I'm up like 30, 35, and you just kind of nickel and diming it all the way. So, I like credit spreads. I've been doing more and more of it lately. I've been doing some of the less risky stuff. I still got some calls on. I got calls on. I got a little mix of everything going on right about now. I got some call spreads, some put spreads, and mostly my annuals on the leaps. Right. I don't usually do the short term stuff, but it's been working. So I've been kind of sticking to it and see if I could make some money off of it. And that's what's up, man. There's the trade. So you guys don't have any questions. I guess thank you guys for coming in. JRH Cashmatic, the jewelry box. I decided to just do a video real quick. And there's somebody else is in here. There's JRH Cashmatic, the jewelry box. Yeah, there's somebody else in here, man. Say what's up. I'm getting ready to sign off. Say what's up. So yeah, that's it. So it's a weekend video. Well, not really, because I still may come back and do a weekend video. I just wanted to do it live, get it over with. I didn't want to edit. I don't want to render. I didn't want to upload and do all that stuff. So that's what's great about doing live videos. And besides, I get to talk to you guys, man. And when you guys start asking questions, I have no idea which way the video is going to go. I always have a game plan. Right? I have a game plan that says, okay, I'm going to talk about this. If no one kind of gets in, and I'll just kind of end it. But if you guys get in and talk about something, then who knows where the video is going to go. Anyway, thanks for watching, everyone. Enjoy your Friday. I'll see you guys on Monday. Hopefully I'll come back Saturday or Sunday and talk about something. But Monday, next week, and I'll keep you updated on this trade. And you could, let me in the comments. This is for the people that's not live. Let me know what you think about it. I'll talk to you guys later. This is Dre. I'm out. I'm on Twitter, Instagram, Dre Trades, right? And I'm out.